and thanks to you traders to let me share 3 very special chart settings that will power your trading to much higher accuracy, because isn't that what we want? Less subjectivity, less guesswork, better accuracy. So I'm going straight to the technicals here. So hopefully I don't pitch this over the top of your heads, but this should be easily understood by even some of you beginners. And one of the things I hope you do take away, other than these special tips and tricks that I'm going to share with you, is I want you to stop trading a one-size-fits-all approach, okay? So here's what you're going to learn today. I'm going to start off with a promise. I'm going to share with you 4 secrets that will skyrocket your profits. First of all, I already talked about guesswork. Way too many traders, even experienced traders, still trade with the seat of their pants, or they use a combination of technicals and their hunch. Don't do that. You really need to boost your confidence with something far more rigorous. And so I'm going to give you some tools today that'll help you increase your confidence, reduce the guesswork. Next, I'm going to show you how cycles can help you understand and reveal not just trending, but the power of trends. How strong are they? So that you will be able to gauge how to manage and exit your trades. And in order to do that, I'm going to share with you some very special secret chart settings that will help you increase that winning accuracy. I'm going to give you the same formula that we use in our own Boolean logic mechanical automated trading system. I'm going to let you use those yourself so that you can start trying it out. And of course, once you know those settings, you will be able to determine the strength of the trend. I'll explain what I mean a little later and why strength of trend is an important concept in trading, because it'll inform you as to how do I manage and exit my trade. You see, way too many traders, they just have that one-size-fits-all mentality. All they want to do is get in and get out. Maybe they scalp, and that's all they do. Or maybe they just get in and hope for the best and try to get out when it looks like, quote unquote, it isn't going to go any further. You don't want that. You want something that's far more rigorous and precise, and I'm going to give it to you. And as a bonus, just for being here today, I'm going to show you how to take all of these strategies and repurpose them so that even if you're not a day trader or have no interest in day trading, you can repurpose it for position trading. Short-term position trading is called swing trading. So why am I qualified to make these promises? Well, that's me. I'm Michael Guess, and I've been a professional day trader for over 25 years. I started TradeSafe about 20 years ago, and I've graduated over 4,000 students. Along the way, I've created a host of indicators and trading systems. And in a past life, I used to be a psychotherapist, which definitely qualifies me to address a very important concept that's seriously overlooked in trading, and that is trading psychology or discipline. If you don't have discipline, you don't follow the rules, you can't buy that stairway to heaven if you're not going to follow the rules. It won't work. Now, some of you are going to have questions here, and I'm not sure if I'll be able to see or answer those questions. Let me go over to this other window momentarily and see. Yes, there are questions. All right, let me park this other window and bring this other one up a little bit better, so bear with me. One of the things I want to make sure of is that, of course, you can see and hear me. Would you please type something in the text window? If you don't know where that is, look in the top right corner of your main monitor and you'll see the GoToWebinar control panel. And you click on the topmost button, it's the left pointing arrow, yellow button. It'll slide over and reveal a text window. So type something in there, and somebody already typed the word something. I love it. That's great. Thank you very much. So let me come back to the presentation. You're bound to have more questions than I can possibly answer here. We got a terrific group, big size. So what I do is I'm going to offer you, after this is done, an opportunity to consult with me, to visit with me. No, it won't be a sales pitch. I absolutely promise I won't try to twist your arm and try to close the sale. My whole approach is to candidly answer your questions so that you can make an informed choice yourself about what we do offer. And I will share with you later some of the other things we do offer. Now, you'll get an email once I get the list from our host. It might take a day or two. When I get that list, I'll send out an email with a link that'll have my scheduling calendar. You'll see the date and the time. Please find one that works for you and do it quickly because these things do fill up really rapidly. All right, one more thing and then we'll jump right into the actual content. I'm going to not read all this boilerplate. I don't think anybody else bothers, but I do. I'm a stickler for detail, and that is the FTC, which controls the internet, says nobody's allowed to make a promise or a guarantee. Whole lot of vendors out there that are involved in the financial industry promise things. They're violating the law. I won't do that. When it comes time for you to examine things like our trading system, for example, and that would be in another presentation, I'm not going to break that law. I will share our track record, but that's as far as I'm going to go. I won't promise that you can duplicate it because, hey, you're a human being. Maybe you don't follow the rules. The other thing I want to say, and then we'll get off this topic, hey, if you're a beginner and you haven't heard this yet, please don't trade with money you can't afford to lose. These are very strange times in the market. More than ever, you really want to make sure you trade with discretionary income. So let's move on. What are some of the big problems that traders do face today? Well, of course, the elephant in the room, that's coronavirus. And I hope you're all well and safe at home. But a lot of us, we're stuck at home. Maybe you don't want to be. Maybe you got a job and you got furloughed or laid off or something like that. Or maybe you are working at home. Okay. But if you are at home, why don't you capitalize on the opportunity, reframe this whole situation, and use this as an opportunity to trade more effectively? One of the first things I would like to remind you of, and this is a big problem for a lot of beginners, and I'm not sure what you were saying there, Kathy, but I'll have to come back to it later. Pardon me. One of the other big things that a lot of beginners overlook is they think that, and I use this term a lot, one size fits all. They assume that if they buy this or that special indicator or even something that's touted as a trading system, that it'll work exactly the same on each and every market. Guess what? That's not true. Markets, like we, have personalities. Some markets are really volatile. Others are very sleepy. Some of them trend. Some of them are range bound. They have personalities. You need to examine the market that you're considering trading and look at a lot of its history to be really sure that it absolutely has what you need for the style of trading that you favor. I personally favor trending markets. Okay. Now you can trade all kinds of stuff. You can trade breakouts from congestion, but unfortunately they often fake out. That's not very reliable. You can try to trade within a range up and down, but that requires you to be really nimble. I don't favor that either. That's very challenging. Even more challenging is what I call stepping in front of a moving train, counter trend trading. I have personally, and most traders agree, that trend following has been the easiest and most consistently profitable way to trade. So I invite you to consider that. I'm laying some groundwork here. We haven't gotten into the actual meat of what I'm going to be sharing with you. One last thing, and it's been certainly true during this coronavirus. In the first month of the coronavirus, everything took a huge dump. The markets just had a meltdown. We're in a bear market, probably a recession, and volatility has just gone off the charts, pardon the pun, if you are looking at intraday activity. Please do not try to trade markets that are extremely volatile under those conditions, if those risk levels are beyond what is acceptable for your style or approach of trading, don't take the trade. And as I mentioned before, maybe your market is a large range market. That gives it plenty of follow-through opportunity when you get into a trade to actually make money. But if it's a really narrow range market, there probably won't be that opportunity. And as I said earlier about one size fits all, here's an example of it. Don't use a single chart to make your trading decisions. Okay? That is a one size fits all approach. All right, so here is what we are wanting to do. See that camcorder there? It has a zoom lens. It zooms in, it zooms out. Markets are like that. They're fractal. They have patterns that repeat themselves. And just like you can see the big picture with a wide angle and zoom all the way in up close to see detail, you want to do the same thing with your charts. You want to be able to have a high setting on a chart, and not just any setting from a drop-down menu. What I'm going to give you is a formula on how to do that. You want a wide angle setting to let you know intraday what the market is going to do potentially for, if not the half day, maybe the whole day. Then as you zoom in further to the dominant trend, that's the intermediate setting, that's probably going to give you what the potential is for maybe an hour or two at the most. And when you see a setup for a trade, that's when you're zooming in all the way to the smallest chart setting, and that gives you what I call low risk surgical entry. So you want to zoom in for low risk entry with a low chart setting. This gives you a roadmap that you can use for your winning, but first you got to determine the chart's trend. Please, above all, don't use that old common statement, higher highs and higher lows. That's totally useless. It's garbage. It's subjective. It's discretionary. You at least use an acceptable trend indicator that is reliable. In our TradeSafe mechanical trading system, it not only indicates on the charts that you have it installed on whether you're in a trend, it'll also indicate congestion. It'll indicate when you're breaking out, faking out, or having changes of trend. Plus, it'll talk to you in plain English so that you'll even know if you're in the kitchen making a sandwich. But if you don't use our system, at least use a proven trend indicator. Above all, don't guess. Now, once you have something that allows you to determine trend, don't just do it on one chart. Remember, we had that wide angle to close up? Well, you want to use multiple charts and determine the trend on each one, because this will inform you on how you are going to predetermine the exit strategy you're going to use. You don't wait until you're already in the trade, folks. That's too late. You want to pre-select your exit strategy before you get into a trade, just like a chess player. You want to be able to plan ahead, be a professional. This will let you relax instead of white knuckling your mouse. Please don't treat your day trading like a video game and shoot anything that moves. The notion that you got to have fast reflexes puts you low on the food chain. If you plan ahead and are strategic in the way that I teach, part-time trading is truly possible. So you don't need to sit there all day and get hemorrhoids and eye strain. How is it possible? Ratios. This is where the cycles come in more in detail. See those three charts? Those are zooming in a 3-to-1 ratio. And as you go in more and more detail, you go from wide angle to close up. Now I'm going to give you an example for this formula. It's going to be with what are called the minis. Those are the indexes, the S&P, Dow, NASDAQ, and Russell. Now you can use this same formula for other types of markets, but here's how it works. First of all, you need the number of minutes in the daytime trading session. Don't just use the drop-down choice for a daily chart. It's not really accurate. The daytime number of minutes that there are for the minis is 405 minutes. From 8:30 Central Time, that's where it is in Chicago, where the minis are traded, until the pit closes at 3:15, even though these are electronic. That's the greatest amount of volume. So you start with that master number of 405, and then you want smaller and smaller numbers that will divide into it with no remainder. So the next biggest number that divides into 405 is 135. The next one down is 81. And you keep going in a 3-to-1 ratio. And what are you going to end up with? What's 1/3 of 81 that also divides into 405? 27, far more accurate than a generic 30-minute chart. So obviously you need professional software that lets you set these chart settings instead of being stuck with what's in the menu dropdown. If your preferred platform doesn't let you do it like Thinkorswim, then you need to step up to the plate and invest in a professional grade software platform like NinjaTrader, for example. I don't want to criticize Thinkorswim. It's an admirable options trading platform, but its day trading capabilities are grafted on and they're not up to snuff. I'm from Texas, and as we say, don't take a knife into a gunfight. So get professional software. I recommend NinjaTrader. So here are the 3 settings. 1/3 of 27 is 9, 1/3 of that is 3, and 1/3 of that is 1. There's your 3-to-1 ratio. Your wide angle is your 9-minute chart, your dominant cycle is your 3-minute, and your low risk surgical entry is your 1-minute. Now, what do you do with this information? This is only part of what you need to do. You're going to use this same calculation for determining the 3 chart settings for other markets. Same approach. But let's say that a 9-minute chart is in a strong uptrend. The 3-minute chart is meandering slowly downward. The 1-minute chart just started an explosive rally. You don't have trend agreement across the board. What you want optimally is all 3 charts to be trending together, either up or down. Got it? But I'll tell you this, and I'll be candid. Each and every day of trading, and every day is different, of course, you're not going to, on average, see all 3 charts in agreement. When you have trending on the smallest chart, you may see it only on the 3 occasionally, and less frequently even on the 9. So what do we do with this information? Now I'm going to give you another free trading tip. This is the exact same formula that my own students use when they trade the TradeSafe mechanical trading system. It's a rhyme that helps them remember it. It's a teaching mnemonic. And it goes like this. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. That means the 9, the 3, and the 1-minute charts all need to be trending together up or down to give you the potential for a really strong price move before you get into a trade. That means you have the potential for a lot of follow through. You got the wind at your back. You're not just trading off one chart with blinders on. You have perspective. So that means if you get that potential follow through, why would you throw away a trade with a scalp? You'd leave money on the table. You'd get out and make a few bucks, but you'd have the woulda, coulda, shouldas. What you want is an exit strategy that keeps you in the trade a lot longer. You want a scale out exit strategy. What does that mean? You're going to need a multiple position. By that, if you're trading the minis, those are in the world of futures and commodities as an example. But whatever you trade, pardon me, you can't trade a single unit. You need to have something divisible by 2. So if you were trading the minis, and those are called contracts, let's say you were trading 4 contracts, you would take 2 of those off the table at an easy to reach profit target, say $100 or thereabouts. And then you would want to, now that you have a paid for trade, trail a profit stop. How would you do that? Well, in our trading system, it's automated. It does it for you. But since you don't have that, a recommendation would be try a parabolic and experiment with different settings, maybe 5, 3, and 1, things like that. Pardon me. And that way, when it touches the parabolic, when price touches the parabolic, you want to take yourself out of the trade. Again, with our system, it's all done for you. It's automated. Now, This is all very helpful if you've got all three time frames trending together, the 9, the 3, and the 1. But as I already told you, you're not going to get that frequently throughout each and every trading day. What about if only 2 of the time frames are trending together? That would be your entry time frame and the next higher time frame. That would be your 1 minute and your 3 minute. So if all you've got is the 1 and the 3 that agree, it's still tradable. You have some trend agreement. You have some wind at your back, but the potential for follow through isn't as great. It's going to be a weaker, briefer price move most likely. So you don't want to stick your neck out. You want to use a scalping exit strategy. All in with a full position, all out with the same amount of position. So if you entered, say, with 4 contracts, you'd exit with 4 contracts, but it should be an easy to reach target, say maybe $50 worth of profit move per contract. So that way, if it moves $50 worth, it's easy to reach. That would be 5 ticks on any of the minis. So you want to use tuned cycles-based time frames or chart settings, a 9, a 3, and a 1, okay? Now this is what you would use if you were trading, say, the futures and commodities types of markets. A lot of people say, well, what about Forex? A lot of people like Forex. Well, one of the problems with Forex is there isn't a starting and stopping time for us to formulate those chart settings. It just keeps going round and round and round without any starting and stopping time. So you need to create your own synthetic chart settings. A 1 minute chart for the Forex, frankly, is a too small a setting. It's very, very noisy, statistically speaking. I recommend that you step up at least to a 3 minute, and then keeping that 3-to-1 ratio, try a 3, a 9, and a 27 minute. And then only, don't do scalping, only use a scale out exit strategy. Now, you may say, well, how do I know where to get out of the first target? Well, if only the 3 and the 9 agree, you might want to get out at maybe $100 worth of profit. If all 3 agree, you might want to increase that to a larger number, say maybe $200. And again, you can always trail a stop with your parabolic, or if you have something that's an automated trade management exit strategy in your software, NinjaTrader has those, you can use them. That would enable you to have something that is actually fixed and mechanical instead of trying to guess where to get out at maybe some supposed support or resistance level or Fibonacci level, which doesn't really work anymore. But above all, it's about the trend agreement. How many of the charts are trending together? Now, you notice I didn't mention the stock market. Well, that's because the stock market for quite a while now has been dominated by institutional trading presence. They use high frequency algorithmic program trading. So the deck is stacked against you. I definitely do not recommend day trading the stock market. Plus, you got to figure out of 12,000 stocks, which one is really going to be the one today that you want to follow. It also has other limitations like, the margin requirements are astronomical compared to, say, futures and commodities. Futures and commodities, the margin requirement is only $500 for each contract. You could open an account with that much, but you need a minimum of 25,000 just to start day trading the stock market. Plus, you got uptick rules and a bunch of other limitations. And when it comes time for taxes, the stock market will beat you to death. Unlike futures and commodities, you get a low tax rate of 15%. That is the tax rate for 60 cents on each profit dollar that you make. The other 40% is taxed at whatever tax bracket you fall into. So I am biased towards futures and commodities. They're much easier to trade They're even safer to trade, frankly. They've got a bad rap from people who really have never traded them. So I strongly encourage you to consider them instead of the stock market. It's a whole lot easier. And what kind of trending markets would I recommend? I would recommend, I already said, the indexes. Currencies definitely have trending tendencies, and you don't have to trade the indexes from our country. You can trade other countries' indexes like the DAX, that's in Germany, the French CAC, CAC, the UK FTSE, FTSE, and so on. Or you can, if you really want to try to trade the energy complex, don't trade crude oil because it tends to congest and break out and fake out. It's not a real trendy market. Neither is gold. I know they're sexy, but they are not easy trend following markets to trade. So I would recommend, instead of crude oil, natural gas. So I mentioned that we have a bonus. I've shown you how you can use these approaches to set up your charts, know how to manage and exit your trades. What about those of you who just flat out don't want to day trade? Or maybe those who are day traders and maybe want to broaden your horizons. I'm going to show you how to repurpose this for swing trading. First of all, I'm going to stay focused on the indexes because we use that as an example. We're going to use the same 3-to-1 ratio, but we're not going to use the same 3 charts. We're going to step it up to the 27, the 9, and the 3. And here is what happens. Roughly 2 or 3 times a month, you get what I call a grand alignment, where you get all of those trending in the same direction. When they all do, you want the first pullback or retracement on a 3-minute chart. When it stops retracing, and it can retrace to a 21 period moving average that's been around, it's as old as dirt. And when it starts to move back up, you would have a parked order above the bar that's the lowest in the pullback, have a stop limit order. That's what would put you in the trade with 0 slippage. It will put you in the trade, and then this is when they all trend together and you have that first retracement that I've just finished saying. When you're in the trade, you want to scale out not of half of your position. You need to use thirds, sets of 3, 6, 9, not 2, 4, 8, and so on. So the first third of your position, if you're going to try to make a day trade turn into a swing trade, you scale out of the first third at about $100. That'll pay for your trade. It's an easy to reach target. And then your stop should be moved to break even plus 1 ticket profit to pay for any commissions. Now you've got a paid for trade. How do you stay in the trade at least to the end of the trading day and then see if it persists into the next day? Well, you'll trail a stop, as I've given you some explanations earlier, and you trail that stop on the 3-minute chart. And if it makes it all the way to the close, don't do market on close, manually flatten that position about 5 minutes before the 3:15 close. And that way, you will have made quite a bit more profit, maybe several hundred or thousand or more dollars on a small position trade of, say, 3 contracts. Then what do? You're wanting to change the stop that's now still sitting on the final third of your position. That's sitting there at break even plus 1 ticket profit. You want to change that stop to good till canceled so it persists overnight. Then when the market opens the next morning, if you're still in the trade, move that trailing stop up to the 9-minute chart to give it more breathing room. That way you have the possibility of a day trade that turns into a multi-day swing trade. Okay? Now I already talked about trading stocks, John, so you probably came in late. I already made a case for why I thoroughly and yes, you can trade micros. If you want to use micros, they're wonderful to practice on if you want to do sim trading to calibrate first and then put your toe in the water with micro minis. But you're going to make such a tiny amount of money, you'll never ever get rich trading micro minis. But yes, you can, Peter. trade micro minis. So let's review the core concepts before we wrap things up here. First of all, please trade markets that have a trending personality. Investigate the behavior of each market. Look at them for several weeks or months intraday using the different time frames, and notice whether you get a tendency to have follow through. Do they have adequate wide range? We already gave you some candidates, currencies and indexes, for example, they're plenty trendy. Don't try to trade with a single chart. Use that cycles-based multiple chart settings approach that I told you. For the indexes, that's a 9, 3, and 1 setting. That'll help you determine the strength of the trend. The 1 and the 3 need to agree, best as if all 3 agree, and that'll help you determine your exit strategy. Because if only the 1 and 3 agree, you just want to scalp. If all 3 agree, you got the wind at your back, you want to scale out and take money off the table and trail a profit stop using some of my suggested methods earlier. You can probably watch the replay on this when our hosts make that available to you. But I'm also going to give you something at the very end here for absolutely free that will bring this all together. So you're going to either scalp or scale out depending on how much strength of trend. And of course, at the tail end of the presentation, I showed you how you can repurpose this from day trading and turn it into swing trading. Now, I told you that you can actually get all of this information available in a single source, totally free. I'm going to make this totally free for you in an ebook. You don't have any obligation whatsoever. It's going to take what we've covered today and it's going to expand on it and go even further so that you will have an idea of how you can use this for your own trading. Now, if our host will post that link, please, if he's come back in, post that link. This is it in case you don't see it posted. I'm going to have that on my slide. You might want to jot that down so you can get this free ebook. It is daytradesafe.com/festival. All right, so that's Festival of Traders. That's what this event is today. So daytradesafe.com/festival. All right, now I want to thank everybody. I'm going to check my time. I don't know how close I am to it. Got a few more minutes here. Let me look and check the questions before I wrap things up. The last question I see from Tess, thank you, Tess, is can you trade the spiders? Well, they're part of the stock market. So you got the same problems that I discussed about the stock market, Tess. You really want to stay, if you're going to day trade, you want to stay entirely away from all of that. This has been my experience with 25 years of day trading. I haven't traded a share of stock since 2001. How's that? Now, I know a lot of you are married to the stock market because we all started there. I did. I was what was called a SOS trader way back in the day. I day traded what was called the NASDAQ, all those stocks independently in what was called a prop shop once upon a time. But I quickly learned that, the deck is stacked against you. You just can't beat the institutions. So please give futures and commodities a long, strong look. Okay, and swing trading, somebody is saying you can't trade the spiders in swing trading. I don't know about that because, I haven't been involved in doing that in a long time. Regardless. So, all right, thank you, Vicki. So folks, I want to say thank all of you. What's going to happen here is after this event is all over, our host will provide the list of who attended today to me. And what I will do is I will send out an email to you, and it's going to have a link to scheduling time with me so that you can ask all the questions you want. And I totally promise, as I said at the beginning, I will not try to turn it into a sales call. I won't twist your arm. I'll answer your questions, even if you're interested in our TradeSafe Boolean Logic mechanical automated trading system. I'll answer your questions about that. In fact, if you want to get a jump on it, there's a link at the bottom of the screen. I don't think he has that link, but you might want to jot it down. daytradesafe.com/trading-workshop. If you go to that URL, you will then see a replay of a recent webinar that I did just a week ago, and you will learn all about our TradeSafe mechanical trading system. How many signals a day does it give? As many as 20 or more, typically 6 to 8, and that's on a single market. And we in our classroom typically monitor 3 of the indexes. So you get more trading opportunities than you can handle, Peter. Any questions? Any further questions? If not, I want to say thank you to our host. And I'm going to go ahead and mute out and turn it over so that I can be on time. Thank you so much.